Good morning, everybody. This is the Saturday morning webinar. Today's topic is, excuse me, when to scalp and when to let runners run. Should be a good one. First, we're going to knock out our standard disclaimer, so let's go ahead and knock that out of the way. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, without further ado, let's get over to a chart. And here's how we're going to kick off the morning and make sure everybody's awake and alert and ready to absorb some knowledge. So if we say that runners run and scalp. So let's think about what the conditions would be for either one of those to be true. So let's go ahead and write them down. I did a little bit of this on Thursday, but we're going to rehash a little bit of it today. Some of you are brand new. We are connected to a data feed to our broker, Ninja, and we're getting a feed of the futures contracts here. This is ES. It's the E-mini S&P. Each point over here is worth $50, so it's $12.50 a tick, 4 ticks per point. And what you see on here is the Viper indicator. So there's background colors, there's bar colors, power meter trends indicator, predictors. It's real-time support and resistance levels. And then, of course, the most prominent thing is the bands. So the thick line in the middle is the mid-band. It features prominently in our trades, and we'll talk about that a lot today. There's 1, 2, 3, 4 bands below it, and 1, 2, 3, 4 bands above. This thin red line here is called line 2 because it rests above band 2 right here, this line right here. That features prominently in our trades as well. And then you have line 6, which is the green thin line up here. Resting just above band 6, which is right here. Of course, we have the stealth indicator. We use that a lot for trail stops. That's this sort of sneaky snake looking line. There's some red ones. Some red ones when the market's going down. And then, of course, conversely, you will have green ones when the market goes up. See the snaky line? We've had that forever. That's one of the original indicators, going way back 9 years ago. And so the way it pretty much works is, now let's talk about the two conditions. And then we're going to work together for a chunk of this morning to identify what the market condition is, and then also quickly identify whether we should be scalping or going for runners. Excuse me. Let's start off with this so we have a good understanding of what we're talking about. So generally speaking, when you are in a trend, that's when you're going to look for runners. And runners are simply trades that go for, as runner, the term runner would imply. Excuse me. Yeah, I got this tickle in my throat. Darn it. Get these in the morning. Let me take a sip of tea. Stand by. There we go. Okay. So the term runner means, no, maybe the better way to put it is larger targets. Now, when the opposite of a trend is a range, obviously everybody knows that, and range normally implies scalping. And by definition, scalping means smaller targets. Now, how do we know at any given time whether we are in a range and should be looking for scalp trades, or whether we're in a trend and we should be looking for runners. What is the primary difference between these two market conditions, trend and range? Any ideas? When you look at a market in real time and you're in the chart, you're looking at a chart, you're in the live room, you're looking for trades, you're trying to decide what you want to do, you have to know what the current market condition is. So how do you know if it's in a trend or it's in a range? How do you know? What is the difference between the two? Anybody? This thing's on? That's not a rhetorical question. Anybody there? That's an actual bona fide question. By the way, over the years, I have to tell you something. The people who come to these things and participate usually are the traders who make money. The bumps on the log usually don't make it. Just a heads up on that. Anyway, yeah, so a trend is a series of higher highs and higher lows, right? Trend is higher highs, higher lows, and the reverse on the upside when that's an uptrend. And a downtrend is the opposite. Lower lows, lower highs. And of course, a range is the lack of that. So a range is sideways. And that means same highs and lows, right? Or very close to that, same highs and lows. Now that is easy to say, right? That's easy for us to sit here nice and comfy on a Saturday morning and say, oh yeah, okay, well that makes total sense. I've heard that a million times, Charles. That's nothing new. So what? Well, here's the thing. Four ticks across, 4 range bars, 4 ticks. Okay, most of you see that, right? Okay, so how do we know? All right, so let's look at some examples. We're going to do some of these exercises together, and then I'm going to flash up a series of screenshots, and you're going to have to quickly identify whether it's a range or a trend. Now here, obviously, you can see we are in a downtrend, and you can just quickly eyeball this. Yep, here's a swing high, here's a swing low. Here's another one. I'm not going to do them all, just point to them. Another one, swing low, swing high, swing low, swing high, swing low, etc., all the way down. And you can use trend lines. You can use all manner of things to visually see if you're in a downtrend. And for now, I'm just going to leave it that we're not going to look at trade entries per se at this particular juncture, because you can't really have a trade entry until you know the market condition. Yes? So here we're in a downtrend. In no instance of this whole channel sell-off here did a swing high and low break the previous swing high and low. Is that correct? So that was one of the things I said on at the end of the webinar if you were here on Thursday, and it's a very important thing to know. In no case on the way down did any of these swings breach the prior swing high and low, did they? None of them. That's how you know, visually, okay? That's how you know. When you're looking at something and it's unfolding in real time, right? That's how you would know. Let's advance the chart back and forth real quick. Here's a drop. There's a thrust. Here's a swing low. Here's a swing high. It's clearly lower than these over here, yes? So you're visually tracking that. You can put trend lines on your charts too, uptrends and downtrends. All right, now I'm going to advance this chart, and you tell me when the trend has changed. Now the trend, here's the thing. The trend can change from up to down, down to up, or up to sideways, down to sideways. So there's actually 4, because most people think, well, if I'm not going down, therefore I must be going up. Right? That's not really the case. Markets just don't always go down and then they go up, right? They go up to sideways. They go down to sideways. They can go from down to up. All right, now what I'm going to do is I'm going to go ahead and advance this chart. And when you think there is a trend change, and the trend change, you don't have to say what the trend change is, right? You don't have to say what the trend change is, because it could be up to down, could be up to sideways. You just type in TC. All right, so I'm going to advance this chart in real time, and we're all going to watch it together. And then when you think the trend has changed, you type in TC. Okay, we're going to pretend we're looking at this market at 9 o'clock on Friday morning. Ready? Here we go. TC. Right now you're at 10 a.m. right here. Here's the channel. It's been trending down all morning. In fact, all day, all morning, and all overnight. Okay, here we go. 11 o'clock, 11:17. I believe this was Thursday. Morning. Yeah, I think the 4th was Thursday, right? Okay, there's 11:30. 11:36. Remember, you're typing in a TC when you believe that the trend is changing. You don't have, as I said, you don't have to say up or down. You don't have to say what it is, just that you think it's changed. Okay, now we're at 11:48. 12 o'clock. Okay, I'm going to stop it right there. Now, looking at it now, a lot of people are coming in with your TCs, and that's okay. However, by definition, when you got, by our definition, when you got this, and then you got this, what was happening? What was our condition for the downtrend to be true? Remember all the way down? Those highs and lows that we highlighted? Remember all those? Remember them? Remember the downtrend line intact? All of the subsequent high and lows were beneath each other. That's our definition of a downtrend, yes? And that remained true all the way down, all the way down, all the way down, all the way down to here. Now, when did that cease to be true? Well, you could make the case that this series of swings right here that defined the top of the downtrend line was one condition of a swing, yes? A most recent swing high inside the channel. And this was the definition of the swing low in the channel, yes? Now, some people actually typed in trend change when this occurred right here. And I would say that was a little bit early. A few of you typed it in when this thrust occurred. And I would say here again, that is a little bit aggressive, simply because from it being a higher high from the higher low, that's true, from the previous high, this thrust has breached this swing, and now you've put in a higher high. Now, for the trend change to actually occur, you would need what? A higher low, and you get it right here. So, in terms of the correct answer to the question, when this higher low formed here and then it started to go sideways to up, background turned to green, You were getting a series of higher highs and higher lows. The bars are blue. This was the trend change right here. So why is that important? Well, if you know what the trend is, you know what direction of trades you should be taking, yes? What type of trades are we taking in this condition right here? Longs or shorts? This downtrending channel. Shorts. What type of trades are we taking in this condition right here? Longs. So, from a trading perspective, one of the most important things to know at any given time in real time is whether you are in a downtrend, an uptrend, or sideways, and what type of trade you should be taking. So in downtrends, we take shorts, uptrends, we take longs. All right, let's do a couple more together. I'm going to do another one here. I'm not focusing so much on trade entries just yet. We will talk about that, but needless to say that retracements up to resistance are the areas to short. So here's a short, right? Here's a short. Here's a short. You all see the shorts, right? You see where to get in. We know that. We've talked about that 1,000 times. Every time it kisses resistance, here's another short. In a downtrend, you're shorting it. Kiss and roll short. Kiss and roll short. Come up, kiss and roll short, etc., all the way down. Yes? Over here, when the condition turns to an uptrend, we're taking longs. It comes down to support, that's a long trade. Here's another long trade. These are all long trades in the uptrend, okay? All right, now let's do one that's a little tougher. That was kind of an easy one. That was, the trend was clear. It was moving quite nicely. Everything's in sync. Life is good. But it doesn't always work like that, right? It doesn't always work like that. So we're going to do a little tougher one. Are you ready? Okay, we're going to do a similar exercise. Now this would be Friday morning. I'm going to use ES one more time. This is Friday morning in the pre-market session coming up to the open. Okay? Ready? Here we go. Now, I'm going to help you out a little bit on this one. You're pretty much kind of in a, some of you might be sort of wondering, let me do it this way. Okay, and let me orient you so you get some perspective on this. Midnight Pacific was here, so my time. So Asian session was ending. Okay, European session was starting. At 5:30, we had non-farm payroll on Friday morning. That would have been right here. You can see from 5:30 to 5:31, we get a massive shotgun of bars. Okay, this is not tradable. You have to wait. And it looked like it wanted to go up, went sideways a little bit, looked like it wanted to go down. And then over here, you're at 6 o'clock, so you're just almost 30 minutes before the equity market open at 6:30. So in this condition here, you would say it looks like it's up at the time, but the open of the market's 20 minutes away, and we know anything can happen, yes? So when you think this condition here to the right at 6:09 has changed to something different, you will type in trend change, or TC. Ready? Okay, Friday morning, here we go. There's 6:30, 6:36. Remember, when you think something's changed, you type in TC for trend change. Ready? Okay, 6:48. It's the E-mini S&P. Blow it up a little bit here. Scrunch it up so you can see it. Oops, okay. Going forward, 6:58. So you're coming up on 7 a.m. Pacific. Okay, there's 7:05. Right-hand side of the chart, looking for trend change, remember? $7.25. Okay, I'm going to stop it right there. Now, I'm going to give you my view of this, okay? Now, there's different ways to look at conditions like this, and I'll share with you how I look at it, okay? Clearly, from this perspective here, going into the 6:30 open on the equity markets, you are more or less in an uptrend. This pullback here right at 6:30 was actually a long trade. We all see that, right? Came just above the mid-band and bounced. That was actually a long trade right at the open, okay? Now, we come back and we consolidate here. So as of this point, the swings are defined as such. Here and here. These are all a series of swings, yes? Let me show a couple of them. A swing is just a term for when a market bounces, okay? It reverses direction. It's going up and then it comes down. It goes down and then it starts to come up. So you could make the case that in this area right here, you were getting a series of lower highs and lower lows. The background had turned to red, right? Can you see it? Can you see it starting to break? See, this is the thrusting part of a down move, yes? This is what I'm trying to get everybody to see. This is the hardest thing to find in real time, and that's why I'm doing these exercises. Wouldn't you agree? Isn't that one of the toughest things to figure out in real time? Is this market changing? Should I continue to do what I'm doing? Should I be buying and getting long, or should I be flipping and getting short now? What is the market doing in real time? It's hard. Now, like we looked at over there and the other day, when it was a nice, long, protracted downtrend, it's pretty straightforward. You can see it's just time to short every time it comes up and short. But when it's spiking around like this, it's very hard to tell, yes? However, this is what I was trying to say, is that you have to pay attention to sort of the micro situation that's going on here. You can very clearly see that you're getting a succession of lower highs and lower lows. Each one is breaching where the other one was. Now you get a spike up here, and it comes and it rolls right up back down through the midband. This was short entry number one right here. And I would submit to you that by this swing low down here, that it was pretty clear that the trend had changed to down and you are now looking for shorts, right? Each one of these little sort of baby pushes up could not get even past this box. So when you're looking at this in real time, you have to learn, and this is a really critical skill for your success in trading, is being able to see those swings in real time and then quickly process in your mind what's happening. If the little swings are all right next to each other, and you could make the case looking back, and you could have actually drawn lines here, that you were all the way back into the end of the fourth, you were just pretty much in a big old range here, right? I mean, it's a tradable range. There are trades in here, but you are pretty much in a range. This is not a trending situation here. Although within each little swing, there are trades that can be taken, yes? There was definitely trades in here, but you were in a range, right? But over here, you definitely go into a long, protracted downtrend. Pop quiz to make sure you're awake. I'll give you 5 seconds on the clock to get this one. Ready? Here we go. Is that a legitimate short trade by our definition, yes or no? You can just type in a Y or an N. Is that a legitimate short trade, yes or no, by our definition? Four seconds left. Just type in a Y or an N. Should you choose to participate. 2 seconds left. What say ye, team? Cast thy vote. Some of you say, I'm still learning. All right, time's up. Yes, the answer is yes. This is a legitimate short. Some of you are brand new or just visiting, so it's not clear um, what the condition is for an acceptable short or long. And let's talk about this for a second so that everybody understands. Remember we said that we have the bands, we have the stealth line, we have the mid band, and we have line 6. Okay. In a short condition where the market is in a downtrend, we are looking for a kiss and roll off of resistance to take shorts. The minimum criteria for a retracement is that it has to close above the red stealth, which this does here, yes, meets checkpoint criteria number 1, check mark. Has to close above line 2, which is the thin, skinny line here that runs across the top of band 2. Does it close above that? Yes, check mark 2. Legitimate short entry right here. This is called a shallow entry. It's the shallowest of acceptance of short trades that you can have to take a short. Now, the mid-band trade is defined as follows. You have these bands that are above and below the mid-band located like such. Somebody typed in here, it didn't hit the mid-band, so it's not a trade. That's not true. Okay, you're going to have shallow retracements like this. You're going to have ones that come in and on the mid-band into bands number 4 and 5. And you could quite possibly have trades that come up all the way, still in the trend, up into this area right here. Those are called deep retracements. So when you're in a trend, down, retracements to here are the shallowest most accepted. Mid-bands right here, this is acceptable, and it could go all the way to there. Those are deep retracements and still be in the trend. There's a question over here whether 648 box was a long trade. And the answer is yes. Who asked that question? Roger. Hey, Roger. Okay, so in other words, this box right here, was it a long only box for an uptrend, a long trade? Yes. Now, did it ever get filled? No. You never got filled. It never closed outside of here. So this was a long, because let's go back and reconstruct this. So here's the question. When this box started forming right at 650 or 648, right in here, and you put the region box on here using the object trader tool, would you have been long only, short only, or both? And the answer is, at the condition at the time, this would have been a long only box, right? Although it was a non-farm payroll morning, and so in some conditions in that first half an hour, you can let it go both ways. Bottom line is, if you had a long only, you were not filled long. It never breached it, never closed above it. Okay, now if you had short on, if you did turn short on, you would actually been short on that bar right there. All right, everybody's doing pretty good. Okay, let's pull up a different instrument. Let's shift gears. What else do we want to look at here today? Let's start cranking it up a little bit. There we go. Covered the basics. What do you like to trade? Everybody here this morning, just type in some instruments. Let's go ahead and crank it up and get some instruments on here. Let's get it going. Let's get her done. You like gold? You like YM? 6E? Dollar index? Crude? Well, we just looked at ES, Frank, so we're looking for something else. We just spent a chunk of the morning here looking at ES, so let's mix it up a little bit. Russell, any Russell traders in here? RTY. I see some crude votes coming in here. CL is crude, 30-year bonds. I'll put a bond chart up here. Let me do crude first. Let's do old CL. See how you like it. Now, CL is, most of you know, of course, crude oil is a $10 a tick instrument. So it's a little more pricey than the $5 instruments. And you can get some good movement as long as you're on the right side of the trade. Okay, let's get crude oil up here. Let's do some more complicated looks. Let's do a little bit more complicated looks on crude. We're going to do this a little bit different. On this one, we're going to say, you're going to type in T or R for whether it's in a trend or a range. Are you ready? I'm going to go pretty quick. I'm going to cover a lot of ground here. And in real time, when you think it's in a range, you type in R. Okay? And when you think it's in a trend, you type in T. Ready? Now this exercise applies to any instrument. You could pull up this weekend, say you want to do a little practice, and you want to take a look at it, you can advance it. Ready? Here we go. I'm just going to advance through a lot of bars here. Now, I'm going to help you out. I'm going to help you out. To start off, I think we all would agree that crude oil, as of this time, which would have been the 5th, this was Friday morning, early in the morning from like, I'd say like 4 in the morning until about 6. Crude pit open is coming up right here at 6 o'clock. Okay, so you're just right before the pit open. We all would agree that this is a range, right? This is a definition of a range. Everybody sees it, right? I'll help you out. Now, when you think it changes out of this to something else, like a trend, you type in T. When you think it goes back into a range, you type in R. Ready? Here we go, Friday morning, advancing crude oil, working like we're in real time together. Here we go. I'm going to do this quick. You got to be quick because bars come in quick. Can't sit on your butt and think about it. You got to know what you're doing, yeah? Right? All right. I got to stop it there because there's only really a small handful of people that got this. Which is a little concerning. This is some of the most important stuff you can learn in regards to your trading. If you want to trade futures and make money every day, this is probably one of the most important things to know. You got to know the current market condition. In this case right here, I had drawn a line right here, yes? And we said that as long, what this means is that as long as it stays within the confines of these lines, you are said to be range bound, yes? Now, what happens right here? Is the market crude oil still in this range as of this arrow indicating this thrust right here? Has something changed or are you still in the range? Over here, we're trading the range if you choose to trade it. Buying support, shorting the top, buying support, short the top, buying support, etc., all in the range. We know that. Okay, I'm not going to cover that. However, something happens right here. Now, when you see this occur in real time, if you're sitting on Monday morning looking at a crude oil chart and it does this right here, what should you do? Panic? Go get some coffee? Pet your dog? Let Scarfy out for a walk? No. You are now looking for shorts. Frank, ding, 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 ding. Gold star for Frank K. Here, let's do it again together. I'm going to blow it up and we'll do it together. This is super important, guys and gals. I just can't impress on you how important what I'm showing you is. All of what you're doing in trading stems from this. It all does. If you struggle seeing this, it's going to be tough for you. Okay, I'm just saying. That's why I spend so much time showing it to you. All right, okay, here we're in the range. Let's look at it real quick together. Okay, ready? Here we're in the range. We're in the range. You put your lines on the chart. Life is good. We're in the range. Maybe you don't like ranges. Okay, you're not trading the range. Whatever. Okay. Here we go. Now, all of a sudden, here at 6:15, 6:16, 6:23, you see a series of red bars breach the bottom of the range. Right in here. Your spidey sense, Your trading spidey sense should kick in and say, hey, wait a minute, ho, 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 stop the train. Pull that bus over. What in the heck is going on here? Something has changed. The background is turning red. The bars are red and breaking support. This is an indication that the market is breaking down. It's taken out the support of the range and it's breaking down. And so the swings that we looked at here and here and here and here all the way through the range has now been broken. So we know when that happens, we are now looking for shorts. But do you short the thrust? Yes or no? So is the trade entry here? Is this where you get in? Short down here. Is that where we get in? Do we short thrust moves? Conversely, in an up move, when it thrusts up, is that where we're getting in? You get long at the top of a thrust, right? No, no, no. A million times no. We all know that, right? You got to wait for a retracement. That's if you're getting in on thrust moves, you're probably getting killed by getting your stops taken out, yes? You want to not do that. You have to patiently wait for a retracement. Now, looking ahead into the future, beyond the right-hand side of this chart, where is the lowest place? Where could potentially trades be set up? Where could they be set up? This is like the projecting part of taking the trade. Okay, the market's down here. Now, you're not thinking about that. Well, you could be, but really you shouldn't be. Because if you're anticipating, let's do it together. If you're anticipating what could happen, if the market came and closed in these areas right here, I'm going to do a couple of them for you. There's the lowest minimum criteria above line 2 in stealth, yes. Here is the midband area, right here. And then we know, by definition, in what has now turned into a downtrend out of the range, it could go quite possibly as high as up here and still be a legitimate short, yes? So what I do, and you hear this in the room, and I know Gary does pretty much the same thing, what we do is we are constantly using our eyes to check where the market has been over here and here and where it might go. So for instance, in the room, and a lot of times you'll hear one of us say something like, if crude was to pull back up into the 40-44 area and kiss and roll, that would be a short entry. So what's happening is, in real time, as the market's down here, I'm not concentrating too much on that unless I'm short and I'm trying to get out of it with a stop or a target. I'm looking up here. I'm thinking out into the future where it might go if I'm not in it, where I could get in it. Yes? Is everybody following that? How many of you do that? Quick show of hands. How many of you look into the future beyond the right-hand side of the chart and visualize where the market could go, where you will get a short? Anybody? Show of hands. Just say me or yes or whatever. Some of you say I try to. I'm trying to do it. Perfect. That's most excellent. Roger says I will start doing it now. Good. So what I'm showing you here, and I think everybody sees this, is two things. You have to understand the current market condition. We know that. We've said it 1,000 times. Are we up, down, or sideways? That drives what type of entry you take, whether it's scalping, long or short with runners. Yes? Now you have to go beyond that and look into the future and project out, if this happens, I will do this. A couple of you were saying, I've chased thrust moves and they're killing me. Pullbacks rule. They do. They absolutely do. That is the key. That is one of the keys to your success. You've got to project out into the future and visualize if this market starts to retrace. What these little squares that I've drawn here are your opportunity zones. If it comes to here, minimum closes and forms a little box, minimum criteria met, yes? If it comes up into here, mid-band trade, kiss and roll, short, yes? And we know that it could come a little bit deeper and push all the way up into here. And if it rolls, that could be still a legitimate short. Hold on, Frank. Stick with me here. I see some questions coming in. Let me illustrate what happens, and we'll follow through, and then we'll move on, okay? All right, we're looking for shorts. You tell me, type in an S for the team here, when you think the short sets up, when you should take it, when it's ready to be taken. Signify it with an S. Here we go. I'll do it bar by bar. And I'll blow it up huge. Remember, you're typing in an S when you think the short trade is set up and is ready to take. Bar by bar. Remember, you're looking for shorts and you're typing in the letter S when you think the short has set up. All right, too late. Most of you got it. Some of you didn't get it, and some of you might be asleep. That's okay. It's still early in the day. So let's look at it this way. What's a better way to show this? Okay, here's what I'm going to do. Here's what I'm going to do. I'm going to do it this way. Okay, you tell me when a bar is no longer going up. Because in a retrace, the bars are going in the opposite direction of the trend, which are up. Bars are going up, right? In the retracement in a downtrend, yes? Okay, and remember, ahead of time, when the market was down here, these bars were forming down here, we were projecting out into the future, and these boxes represent the sweet spot zones of where trades could occur. This is our visualization ahead of time part of thing, where we're thinking beyond the end of the right-hand side of the chart. When do the bars stop going up? This one? This one? Just type in a Y when you think it's no longer going up. This one? This one? This one? How about this one? What about that bar right there? Or would it be this one? Here, let's do it. We could do it this way. Okay, we're getting a lot of Y's right on here. Good. Good. This is a reversal bar. All of these are retracement bars going up in the direction of the retracement. This bar reverses. Is this bar right here located in any one of our sweet spot opportunity zones to take a short? Yes or no? This bar right here. Here's the boxes we looked at ahead of time. This is our visualization part of it, right? It's got to get above line 2 in stealth for a short. Could come into the mid-band area, right? We did that ahead of time. We're looking ahead, yes? Could come that high. We all know that, right? This is in the sweet spot right down the pike strike zone. Couldn't get any better than that. Rollover bar short within 2 ticks of the mid-band. I don't know what words to say. I mean, even if you got in on this one, it's okay. I mean, if you threw a region box on it and you got filled on that bar right there, it's still acceptable on a very good short. Everybody sees that, right? So one thing I can suggest to everybody in here and everybody listening on the recording later on today or whenever you listen to it is if you really want to get good at trading, this is one thing to practice doing. This exercise right here. You can take you don't even have to you don't have to buy special data. You don't have to have 72 hours of recorded everything in the world. It's all in your database and it's all right on your chart. You can just practice doing this. You can toggle back and forth until your mind gets it. Okay, here, you do this. You can do this for a half an hour a day. It will make a huge difference in your trading. Okay, here I see I'm in a range. Uh-oh, broke the range. Okay, all right, background's red. Looks like it's heading down. I should be looking for shorts. Gonna be looking for shorts on a pullback. Thinking short on a pullback. I'm looking ahead. If it comes up into here and rolls, I should be looking for a short. And then bar by bar, go through the retracements. Just exactly like I did it. Going up, going up, going up. We're getting close to the midband. Now, in my mind, when this occurs, when these bars, here, let me just put it this way. When these bars are dinking around down here, there is no trade. There is no trade down here, right? We all agreed you've got to at least get up into here. It's got to at least get into here for us to be interested at all in taking it, yes? We're really ideally looking for here, but we know that it could come in here and roll, and we know it might go a little bit further, so you just go back and forth. Okay, bars are starting to go up. Bars are starting to go up. At what bar should you start paying attention to it? How about this one right here? Is this starting to meet the criteria? That one? Yeah. Now your spidey sense should be perking up, yes? This bar right here, you should be starting to pay attention because you're entering the sweet spot of taking the short, right? Here it comes, here it comes. Oh, we're right here. Just almost kissed that midband, and we get a reversal bar back down. Right in the heart of where we could take a trade. Does everybody see that? This is extremely important. I know a lot of you struggle with this. This is probably the two toughest things I'd say about trading, the most in all the years I've been working with traders and trading myself, is this issue, this topic right here. First of all, knowing whether you should be long or short. We fixed that because we know what the trend is, right? And then where do I get in? Where do I get in? Well, I just showed you how you figure it out. Okay, let's go back to our other exercise. We've talked a lot about trade entry, and I hope that helped. The stop is usually by default in Object Trader 12 ticks above your fill, and that OT will put it there for you. So if you're filled short at 39, 12 ticks above there is 51. And you can drag it down if you want. You don't have to leave it up there. So 12 ticks above here would be 51. It'd be way up here. $51. If you don't want it, if you get filled and it starts to follow through and you have a scalp, you're going to take that thing right down close to where you got in, and then you're going to peel one contract off at 6 ticks. Well, Cross, you're going to have to work that out. I'm saying default on Object Trader is 12 ticks. Every trade's a little bit different. NASI, if you trade NASDAQ, we all know it's Spazzy NASI. Tends to sort of oscillate around the entry. 12 might be too tight. Might have to go 15. ES could be tighter. You rarely get spikes against you in ES. I mean, your tight can be as tight as on ES is 6 or 8 ticks, and you'll be okay. Now realize on ES that your scalpy target's going to be 4. Does everybody see this? Ever questions fit on the one-sided webinar? What people ask? I'm sorry, Brett. Did you ask a question I didn't answer? What do you do if it just keeps dropping with no retrace at all? You have to wait. The minimum criteria has to be met to take the trade. Okay, that's one of our rules. If it just keeps dropping, if this thing just kept dropping, falling off the map another 40 ticks, and you didn't get anything that at least came back into here, well, then you're just going to miss that part of the trade. I mean, if there is some small retracement that kisses up under here and you feel like getting in, you could, but it's risky because you might not even get a scalp off down to a support level, and then it flips and runs against you. So it's a trade-off. Yeah, it's a trade-off. No question about it. Let's do one more exercise. I'm going to advance this chart a little bit here. If I didn't answer your question, please type it in again because I spent a lot of time on that trade entry thing there. Let's do another trend change exercise. Okay, are you ready? These are going to be a little bit tricky. Roger, it depends on how quick that happens on that reversal trade we just looked at short. If it's happening quickly, you'd have to use either a market order or put a target, a limit order under the bar or bar close, activate bar close. Oh, you want to see the bonds? Okay, let's flip over to the bonds. Yeah, if there's time, normally there will be bars that will sit at the retracement level at or around the mid-band or just above it or just below it. And there'll be time to draw a box. If there isn't, you have to use the other tools like bar close and market entry. Stand by. I'm loading ZB. A couple of you said, can we go see the bonds before we wrap? And I'm going to do it right now. This is the 30-year Treasury notes. We are on the December contract, and I'm loading it right now. Stand by. Now, next, in terms of contract volume, ES is the big dog in the house. That regularly trades each day between 1 million and 1.5 million contracts in the active market. Here's bonds. Next up are the bonds and notes. You have 5-year, 10-year, and 30-year. ZB is the big dog. It's 30-year. It has incredible volume as well. It's not unusual to see 500 to 800,000 contracts traded on ZB, the bonds, 30-year bonds. ZN is the 10-year notes, and ZF is the 5-year notes. Now you can see here, you don't get a lot of movement in the course of a day. These are like big lumbering old dogs. All right. Now the only thing that can help you with this is to use a smaller bar. I'm running out of data over here. So what do I mean by that? Well, let's do this. Let's go to range. See, like ES, you're going to have to go with a much smaller bar. All right, let me get oriented so we can all see where we're at here. Here is midnight Pacific on Friday morning the 5th. Okay, so quick question. On Friday on the bonds, were we taking long trades or short trades? So that'd be an L or an S. Is the trend down or up on Friday on bonds? Here's Friday morning right here. Midnight, 5:30. This is the non-farm payroll numbers coming out right here. For pretty much the whole day, were you taking longs or shorts on the bonds on Friday morning? L or an S? Do you think is trade down or up? Shorts. Short only all day Friday. All right, here's another question. How many short trades are on this chart? We'll give you 10 seconds. Counting short trades. Friday morning on the bonds. Let's see, I'll tell you how many I see. Counting shorts. Bonds on Friday. Five seconds left. You should be seeing these pretty easily by now. Two seconds. Time's up. All right, let me see. Some of you typed in threes. I see quite a few threes, a couple of fours, 2 after the open, starting at 6, rollover, breaks, wicked. Yeah, that's right. Okay. All right, good. So we all see that the first one is right here. Textbook classic kiss and roll off the mid-band. That's trade number 1. Short, right? Worked out quite nicely. It was right before non-farm payroll. Would you have taken that? It's hard to say. There's 2 more right here. This meets the minimum criteria up in here. And you got a scalp out of it. down to here. And you probably stopped out and you got a secondary entry short right here on a kiss and roll into band 2. That one worked out quite nicely. Drop, 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 all the way down to here. This trade here would have made you some good money. That trade right there, definitely. Now, is this one right here? Well, it really doesn't meet our minimum criteria. And this is one, who was asking that earlier? What if it doesn't retrace far enough? This is a good example of that. See how you're right on the cusp? Can you see how these trades come above stealth and line 2 and close and form little boxes? See them? See how much more clear they are? And they've done the proper retracement amount? Here, you're pushing it. Now, if you take something that doesn't exactly meet the criteria, if it's close to it, and you think that the trend is clear enough that you want to take it, then what you do is this, is you keep an extremely tight stop on it, and when you're filled, you quick the scalp coin and drop your trail quickly. So in the case here, let's say you're filled short on one of these bars right here, and you have a 12-tick stop sitting way up here. You immediately drag that puppy down right close to where you got in case it flips on you. Let's say the initial stops are sitting up here, 12 ticks above your entries, I don't know, somewhere up here. And you immediately crank that puppy down into here. That way, if it flips, you don't get bit. And if you said that this one was starting to form, but it was right at the close, you are correct. It was right at the close, so it didn't turn out to be anything, but it was a setup. It was a legitimate short setup, yes. So legitimate shorts, you had 1, 2, 3, 4 setups that meet all the criteria of short trade entry, and this one is borderline to too tight. So on the bonds, you can get away with 8 ticks on your initial stop, Weldon. You can get away with 8 ticks on the bonds. And like I said, when you get into some of these trades and you're learning to take them, just put your stop. If Object Trader or you place it way up here, 10 or 12 ticks, and you feel that's too far, tighten it to here, just above the swing, a tick above the swing, or you can go to 2 or 3 ticks behind your entry, depending on what bar you were filled on. So the initial stops are just placed in there in case something just goes nuts. The market goes crazy and flips, and some weird tariff news comes out, and all of a sudden the thing, the market just all of a sudden it's going down, 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 and then for some reason the bonds will rarely do that because they're so thick. There's so much. The order book, if you opened up the bonds order book, you'd see like 500 bid, 1,000 ask, 2,000 bid, 4,000 ask. I mean, it's just huge. It's just enormous thick. And so what does that mean? You're like, I don't know. What does it mean? Well, what it means is that it takes a lot of contracts to move bonds. You know what I mean? So it's not really subject to fluky news coming in and out and spiking up and down like crude oil or gold or some of the equities do. Okay, they're thin. They're thinner. Their bid ask might be 50 or 100 bid, 200 ask, or 25 bid. It wouldn't take much, a couple hundred contracts to push the market around, right? That's not true of bonds. ZF, ZN, and here, let's look at ZN. Do I have ZN? Does that answer your bonds question? Who wanted to see the bonds? Was that you, Frank? A couple of you wanted to see bonds. Let's pop ZN up. I know I'm going over. It's okay. Let's do notes. It could be something that you look at. All the same criteria are the same. The trade entry, nothing is different in terms of the system. You're just looking at different instruments. That's all. I mean, the currencies, you can look at 6A, 6E, the dollar. Trading methodology is all the same. There's different instruments to deploy them on. Let's pull up the notes, 10-year notes. Take a look at those. I'll tell you what I'm going to do this week. What do you think? Do any of you trade the currencies at all? Like 6A or 6S, 6J? Show of hands. Anybody trade the currencies? Because I can show them this week if you want to. Thursday night I can show currencies. I can go through some of the currencies. Oh, some of you do. Look at that. Here's 6 E's. Huh, okay. All right, I'll pop up the. So very similar. The notes are going to be very similar to the bonds. Sometimes they're a little bit different. I see a couple of entries here on the Friday morning for shorting the notes. We see over here you were sideways to down. Here you're clearly in a downtrend all day on ZN, the notes. Very similar to the bonds. You had a kiss and roll here, short, just shy of the midband, right? You had a couple kiss and rolls right up here, short above stealth in line 2, short entries, yes? Here you didn't get quite enough retracement to get in. I mean, marginally this met it, although you really want to see it get higher because you didn't get above line 2. If you like slow moving markets, slow means that they don't move a lot and they don't do it very quickly, then you can go with ES, you can go with the bonds, you go with the notes, ZN, and you'll get some movement, but it won't be very fast. So you have to be patient. They're probably good instruments to learn on because if you get it right, they're going to go in your favor real quick and they're not going to bite you if you keep tight stops on them. The green dot, this is just a swing demarcation at 117.310. This little dot right here is the apex of this swing in reversal, just under the midband in this predictor right here. Short, kiss and roll short. Yep, an entry right there. A couple entries short here. Here you got a scalp. Here you had a very nice drop on this one. This is a beautiful drop down here. Alrighty then, I'm going to stop the recorder.